Hi, I'm Michael Yardney, and the good news for investors is that the property markets have really taken off over the last few months, haven't they? The bad news is that interest rates are going to rise. Have you noticed that whenever there's good news, there's also bad news? Well, there's some more good news. This is the time of the property cycle when fortunes are going to be made. The bad news is that if history repeats itself, and it surely will, most Australians who invest in property won't achieve the financial independence they're looking for. Why? Well, I guess there's a number of reasons. They're going about investing the wrong way, or they listen to the wrong people, or they speculate when they think they're investing, or their fears hold them back. Clearly there are a lot of reasons, but the same opportunities are out there for everyone, and the pieces of the jigsaw puzzle are starting to fall into place, and the future is looking bright for property investors. Earlier this year, when everyone else was talking doom and gloom, I was virtually a sole voice explaining how we were getting set for the next property cycle. I suggested that we were in what I called a perfect storm, a confluence of a number of factors that, when all put together, would set the stage for the next property boom. But I also said there were one or two pieces of the puzzles that were still missing, and that when they fell into place, the next property cycle would start. Interestingly, at the same time that I saw the cup half full, almost everybody else saw it half empty. They said it was the end of the world as we knew it, and the property prices would drop considerably, and many suggested selling property. Now, I don't have a crystal ball, and obviously I'm not always right. Boy, have I made my share of mistakes in both my business and my investing life and my personal life. But fortunately I was correct this time, and now I'm happy to say the last of those pieces of the puzzle are falling into place. Our property markets move in cycles. Every boom paves the way for the next bust. Every downturn sets the stage for the next boom. Our property markets are driven by fundamentals. Macroeconomic factors, those ones that drive the property markets around Australia in general, and microeconomic factors, those factors that affect individual markets. Remember, there's not just one property market, but there are markets within markets, and even within each state there are different markets. Some are geographic, different locations, and some are price-based. Now, I'll be explaining this in much more detail at my upcoming Roadmap to Recovery seminars that I'm going to be conducting with property tax experts Ed Chan and Ken Race. These start in Brisbane this weekend, and I would really like you to attend, because investors who understand these principles will be able to outperform the averages. They're much more likely to fall into that small group of investors who are going to set themselves up for real wealth at this new stage, the beginning of the next property cycle. Now, to find out a bit more about these seminars and the more than $200 worth of bonuses we have waiting for attendees, please click on the link at the bottom of this video and reserve your place. Now, currently the fundamentals for the property market are very strong. These include strong population growth. Our population is growing at a record level, both from immigration and from our baby boom. We also have changing demographics. See, the way we live is changing, and we've got fewer people for each household, which means we need more dwellings just for the same number of people. Now, obviously, these two factors give us an increased demand for property, but at the same time we have a limited supply of properties. Currently, there's an undersupply of property because builders and developers are nervous about building, and banks are reluctant to advance money to developers. So this has led to very low vacancy rates in our capital cities and relatively high yields as rents have moved up over the years. And this situation is unlikely to change for some time, as we're just not building enough new dwellings, are we? Now, at the same time, we also have historically low interest rates. However, this window of opportunity is closing fast, and rates are likely to move up. The cost of money is very cheap today, in fact at 40-year lows. And at my upcoming Roadmap to Recovery seminars, I'm going to be explaining strategies and tactics of how to cope in a changing interest rate environment. Now, getting back to the fundamentals, we also have a strong economy. Australia has really weathered the recession much better than most other economies, and there's little doubt that our economy is now improving, even though there are going to be some road bumps ahead. And there's also the cost of new construction. That's rising, it's going up, isn't it? Which means new houses, apartments, townhouses, they're all going to cost more. And this will pull up the value of established properties, those properties that you and I own. Now, when I explained these forecasts earlier this year, there was one main piece of the puzzle that was missing, and that was consumer confidence. You see, I'd never seen such a mixture of market factors pointing to a strong up property market, yet at the same time, the lack of consumer confidence. But the reason was obvious, wasn't it? We're in the middle of the global financial crisis. But now that consumer confidence and business confidence has returned, more homeowners and investors are returning to the property market. With this last piece of the puzzle in place, it's likely that our markets are going to move forward strongly. But remember that good news, bad news thingy I started with? The bad news is, it's not as simple as that. Not all properties will perform well, and not all investors will choose the right property. As I explained, there are a number of property markets, and there are markets within markets, and not all will move at the same pace. Not will all start moving at the same time. Some are not likely to start moving for quite some time. Now, in preparation to my Roadmap to Recovery seminars, I've taken the time to look back at past property cycles and do some significant research to see which markets are likely to move before others, and how to take advantage of the opportunities that are now placed before us. When looking back at previous cycles, I've clearly seen that this is the time that fortunes were made by some property investors. I know I've made my biggest profits at times of change in the property cycle, at this time, at the beginning of the new property wave. But I also know that most investors have not achieved the financial independence they'd hoped for. Statistics show that over 95% of people who get involved in property investment just don't get it right. So if you do what everyone else does, and if you listen to who everyone else is listening to, you're likely to get the same results everyone else does. Now, I find it interesting that suddenly there's a whole wave of property seminars coming up again. Well, actually, I don't find it interesting. I know this always happens at this stage of the market when the property cycle picks up. The challenge is, who are you going to listen to? Those people who told you to sell up properties last year, or the people who've got a long-standing history of successful property investing and have built their portfolios in the long term and kept them? That's why I recommend you join property tax experts Ed Chan and Ken Race and myself at our upcoming Roadmap to Recovery seminars, so we can show you what we've done in the past to build substantial property portfolios. And I'm going to explain to you exactly the type of property to choose so you can outperform the markets. So please click on the link below and find out more about these seminars. We'll discuss a bit more what we're going to be showing you at these seminars and how you can get over $200 worth of bonuses. Now, by the way, in changing times like we're experiencing, no one can help you quite like the independent property strategists at Metropole. Please remember, we've got no properties for sale, but we have access to every property on the market. So if you want to find out a bit more about what's happening in your local market and what our research suggests in store for us, please join the team at Metropole at one of the free property briefings at our offices in Melbourne, Sydney or Brisbane. Just click on the second link down below. Now, obviously my full day seminar will be much more comprehensive than these boardroom briefings, but they're a great place to start and they're free. So please click on that link down below and join us, and I really look forward to catching up with you at our Roadmap to Recovery seminars.